In this video, we're going to talk about my July 2023 numbers. We absolutely put money on the table. I'm going to show you the summary of many of the trades, but what we're going to do is focus on the poor man's covered call. I'm going to show you how the poor man's covered call is absolutely amplifying much of my returns for 2023. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, just like I mentioned, we are going to talk about my July 2023 numbers. We're also going to talk about a poor man's cover call trade that I did just this past week. But the bigger picture is we're talking about how the poor man's covered call has really amplified my cash flow for this year because we're getting better at it. We understand it, and I'll tell you what, we're taking advantage of some of these opportunities. I'll tell you, if you are looking to use less capital to make more cash-on-cash percentage gain, you want to learn about the poor man's covered call. We're going to talk about it here in a little bit of detail, but first, I'm going to ask if you like anything you hear today. I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this, we're going to have a real quick summary of my July 2023 numbers, where we used approximately $450,000. We wheeled and dealed. We had 13 trades, made $15,122. That is cash on cash, 3.36%. I'll tell you what, we had some stocks that rocketed past our strike price. We had to buy those back, and when we did, we sold the shares immediately. So a lot of times what you'll see is negative numbers on the selling premium side of it, but that's just to buy the option back. We clear the trade or we clear the obligation. We then sell the shares immediately, making all of the max profit that we could have made. The one thing I want to show you and highlight is how the poor man's covered call is turning out to really amplify my cash flow, where we're using less capital, yet we're generating more cash on cash percentage gains, as if we actually own the stock for which we write covered calls, or we use the cash for a cash secure put. We're going to talk a little bit more about the poor man's covered call, but I definitely want to show you how July 2023 breaks a record for me. Since 2019, you can see July has been pretty much a slow month, although I'll take that $7,000 gain back in 2020. By the way, 2020 being the crash, and there's so much volatility, we were able to use the cash secure put to really generate some good July cash flow, some $7,000. But here in 2023, as you could see, using the poor man's covered call, a standard covered call where we buy shares and write a covered call, and using the cash secure put, we were able to generate some $15,122. Now, a lot of this is in my IRA, which is a non-taxable account, but I do have trades happening in my taxable account as well. So what we're doing is we're spinning plates. And quite frankly, I have about 13 positions where I could use them to sell premium. But July, we used primarily these stocks right here. So with that said, let's go ahead and take a look at the breakdown of how I'm generating some $15,100 using the poor man's covered call. Now, real quickly, before we get there, I crossed a milestone for this year. My goal for 2023 was actually $100,000. And I'll tell you what, that was an optimistic goal, because coming out of last year where I only made about 59,000, the 9 to 5 really had me down. Cannot believe that we've been able to use this sideways to higher stock market to generate some $106,000 in only 7 months. Remember, it's August 4th right now, and we crossed the 100,000 mark a couple days ago. Well, since then, we've been able to put money on the table, generating some $7,000 for August already. And I'll tell you, if my trades end in August and I do nothing else, we're going to have a $21,000 month. How are we doing this? Let's go to my summary page for July, and I'll give you sort of a P&L for this July 2023. Now, I know there's a lot of numbers here and it might be confusing, but what you need to understand is every single line item is a trade. We open the trade, we close the trade, we put it on our total income tracker, and essentially it is what it is. You make money or you lose money. As you can see, with my total income tracker, for which you can download from my website at cptdashboard.com, click free spreadsheets. You can track all of your trades. You input the trade, you track the trade, it has calculators in it, and then when you close a trade, you drop it into the very specific month that you're working with. And in this case, it's July 2023. So when we close all of the trades for the month, you can see that we did quite a few trades here. We did a lot of covered calls, and we did a lot of poor man covered calls. Now, we had some stocks that we had to sell, and quite frankly, we had some leaps we had to sell. So that means the stocks are moving above our strike price. We have to buy those options back, and we then sell the shares immediately. This is how we're generating that monthly cash flow. And I think along the way, I collect a nice little dividend here from 3M. Now, 3M being one of my stocks for which I use to sell premium. So I count that as a part of my selling premium portfolio. So with that said, you can see the summary. I had 13 trades and we were pretty active. I want to show you June, for example. June was one of those huge months where I did a lot of trading and made $20,000. Same deal. We write covered calls, we have our shares taken away, we use the cash secure put, and we're either assigned the shares or we're not. We collect premium, we move on. This is what we do. If any of this interests you, I have my membership. The members see every single one of these trades that you see. Here's May, here's April, here's March. So you could see, and oh, let me show you August. We are only 4 days into August and we've already bagged $7,000. That's money on the table. And I'll tell you what, we got a lot of trades on the board. Let me show you the trades we have active right now. As you can see, all the purples are poor man's covered call. The greens are standard covered call where I own the shares, and the red is a cash secure put. So you can really see how we're leveraging that poor man's covered call. We're looking to use less capital, but make more cash on cash percentage gain. And you can see that I have a couple out there that are bringing back some big gains. You can see right here with AMD, we're talking, if my shares are taken away, some $4,500. And if you look at my cost basis, it's $50,000. We're leveraging a Leaps call option to be able to be protected while we write near-term covered calls. The poor man's covered call is my preferred trade these days. We're going to talk about this PayPal trade, Square trade, and I might even hint on this AMD trade. So I want you to stick around. But before we get there, I want to show you one more thing. So when you're a member, you get all of my trade alerts. I will send out these trade alerts talking about why I'm going to invest in Square, even though Square is getting slammed in the NADs. I also show them other trades where I may have rolled a trade. And in this case, this was an AMD poor man's covered call where we wrote a covered call, then we bought it back and we rolled it for another credit. We're always being proactive and we're always managing our trades. I always show the members all of these trades. They see them in and out. In fact, you get to see them in the phone app. You're saying to yourself, I don't have time to sit in front of the computer. Well, the phone app has every single trade and you can see absolutely knocking it down. All the check marks mean we put money on the table and we're looking for another trade. Let's talk about that other trade. We see PayPal right here. This is a poor man's covered call trade that I sent to the members. I give them an explanation as to why I'm going to invest in a Leaps call option for PayPal. Let's go ahead and talk about this, break it down, and we'll look at the initial trade setup. We'll talk about why I sent this to the members as a poor man's covered call trade alert. Now, what you're about to see here is something you don't see on YouTube. A lot of the YouTube videos you see on the poor man's covered call talk about theory and how it's supposed to work. I'm actually going to show you a real trade. This is live, and quite frankly, I could show you anything from AMD, Square, PayPal, Honeywell. The list goes on. My poor man's covered call selling premium portfolio has expanded, and we're absolutely kicking ass with the last couple trades closing where the stock finished exactly where we thought it would, making money, closing the trade, moving on. So here's PayPal. Reason I picked PayPal is because of an email that I sent to the members. Now what you're about to see here is this. I send this to the members as trade alerts. We talk about this. I noticed that PayPal has made this tremendous move up. If you remember, about a month ago, I posted on Facebook this PayPal trade alert where it was trading at about 63 bucks. I was going to buy shares in my son's account. We went ahead and did that. We wrote the at the money strike, knocking it down as PayPal moved higher. Well, as you could see, PayPal did move higher because it was trading at 63 then. It's now trading at about 75 when I write this email. It was in preparation for PayPal's earnings. And I knew that it was either going to trade in a new sandbox or it was going to revisit the old, and we needed to be prepared. So that's where I wrote this email to the members. We talked about earnings being tomorrow or August 2nd, and I'm going to be watching it because it will move higher into earnings, but once earnings hit, it is going to absolutely move. I mean, this thing has literally traded from 350 down to 59, right? PayPal is going to move, and it will move quickly. And in this case, I thought we have to be ready. We have to keep our eyes on the ball. And this is what I sent to the members. We want to make sure if this thing announces earnings and falls, its sandbox is going to be revisited. It absolutely is just moving sideways to higher ever so slightly. And quite frankly, it's looking to break a resistance right here. If I was a betting person and earnings was not right here, we would definitely have continued to move higher. There was no catalyst to knock the stock down or move the stock higher. It was drifting higher largely because low volume and there's not a lot of selling. So the market maker's adjusting the price and it's going sideways to higher. The stock market has been going sideways to higher. Then comes earnings. And look what happens. This sucker falls exactly to the last sandbox it played in. And sure enough, here it is, trading at about 62.75. PayPal has essentially reverted from a stock that was trading potentially into its new sandbox into the 70s. It gets ripped, and now it's back in the 60s. So for me, feeling comfortable that PayPal really hasn't traded below 60 very much, and in fact, found a lot of support as it gained ground here. Absolutely love getting involved with PayPal if it falls. So that's what we did. Now, since earnings, it has fallen a little bit because Square absolutely gets slammed down 13%. So PayPal falls in sympathy. All right, I'm guessing PayPal does not fall 2.2% yesterday. I believe it falls in sympathy with Square coming out with news that Wall Street did not like. It gets kicked in the nads. It's down some 13 points. PayPal's going to fall in sympathy with that, and it did. With that said, maybe a little bit too early, maybe one day too early, we decided to do a poor man's cover call on PayPal. So let's look at the initial trade setup because if you trade the poor man's covered call, this is the absolute most important thing you need to understand. Your initial trade setup must be profitable. Let's talk about it. Now, if you do not have this tracker, go to my website, cptdashboard.com, click free spreadsheets, download your very own poor man's cover call tracker. Inside of it, you will have this initial trade setup. And you fill in all the yellow, it tells you if you're going to be profitable or not. But what you need to understand is this. When you buy Leaps call options, it's all about this bad boy right here, time value. And we talk about this all the time. I cannot highlight that enough. Time value is so important here because that's the cost of this trade. So when I reach in, when the stock's trading at 65.50, and I buy the right but not the obligation to take somebody's shares away from them at 37.50, it's going to cost me $29.09. Now, what's the cost of the trade? If you know anything about options, it's not $29.09. Not at all. The difference between $37.50, right? That's the option I'm going to buy where I'm buying the right to take somebody's shares away from them at $37.50. I'm paying $29.09. So the difference between $37.50 and the current trading price is going to be my option price plus time value. Okay, plus time value. So as you can see, the time value portion of this option, when I buy it, the difference is $1.09. That is the true cost. The covered call writer who is writing this covered call, 37.50 strike, he puts it out there for a January 2024 expiration. He collects $1.09. That's all he collects. Everything else as a part of that 2909 is intrinsic value. He don't make money. I don't make money. We just have to pay for the intrinsic value. So with that said, here's the setup. If I were to do this, where I buy this strike, I pay for that leaps call option, it's going to be a time value cost of 1.66. That's a great percentage for a stock like PayPal, because I would expect a stock like PayPal to have a time value cost of 2 to 3%. So I'll take 1.6%. By the way, there's a reason it's cheap, because on this day, PayPal had fallen some $7 to $8. That's golden rule number one. When we decide to get involved with a poor man's covered call, we truly want to buy the leaps call option when the stock's trading down, and the harder it's being pressed down, that's when we want to buy it. That's why I got involved with Square when it was getting kicked down 11 points. Now, I'm not going to get greedy. I believe PayPal's going to find support somewhere here around 65x, and we're going to go ahead and write the 66 covered call. We're going to pick the 66 strike. We're going to get paid $2.20 if the stock over the next 29 days finds itself stabilizing and moves higher. All it has to do is get to 66. Now, do understand it's trading for 62.75. I understand that. The stock has fallen. I did tell you I did this 2 days ago. Got in a little early. Should have waited for the Square earnings. That is a little tip. If there are stocks that trade in similar markets, you might want to wait for the earnings to get past of the others, because Square absolutely affects PayPal here. At the time of this trade, 65.50 is where it's trading. I want the 66 strike. I'm going to get $2.20 for it. Total movement is $2.68. When we look at the cash on cash percentage gain for this trade, I'm only investing a mere $14,500. I did 5 contracts. This cost me $14,545. So that is the money invested. So when I write that covered call and I collect the full premium as if I own the shares, well, now we're making some 9.2% if my shares are taken away, or if my shares are not taken away and PayPal does not finish at 66 or above by expiration, I make $1,100 cash in the wallet. We still own the leaps call option. We can either sell it or we can use it for another covered call. Okay, but here's the deal with the leaps call option. If you're sitting out there wondering, why in the heck is he buying a leaps call option instead of buying the shares? Well, it's real simple. What we're doing is we're buying the right, but not the obligation, to have the ability to buy somebody's shares. See, I need to have the shares, but I don't necessarily need them in hand. So that's what we're going to do. We're going to buy the right, but not the obligation, and I picked the 37.50 strike. That's deep in the money. Turns out to be a 97 delta. It's very important. This leaps call option, when the stock moves $1, will move 97% of that move. So my leaps call option that I paid $29.09, as moves one tick higher, basically my leaps call option does too. We're mimicking buying the shares, right? And I'm doing it with less money. Instead of physically owning the shares and physically taking on the risk and physically ponying up some $6,500 for 100 shares, instead I buy the right. Now, I have bought the ability to take somebody's shares, and if the stock goes above 66, the market maker will come in, pay me the $66 per share, and then, so they can get their money, because remember, I don't own the shares, they then short sell me PayPal at my strike price of 66. I'll go in, clear the debit, and then I will take my leaps call option, for which is trading higher, sell it, make money. The trade ends, making max profit. Seeing the world through my eyes. If you're interested in any of this, get your 1 free month. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.